Hi, Shae Russell here from Fat Tail Media, and joining me today is Bron Suchecki from ABC Bullion. Bron, thank you for being here.
Great to join.
Now, Bron, this is part of my Hard Money Trader and Rockstock Insider sort of mashup and view on what's happening with the US election. Now, unfortunately for Aussies, there's two things dominating the headlines at the moment, and that's the Rona and also the endless news cycle around the US election. Now, tell me, is the US election as important to Aussie investors as Americans make out it is?
Well, I mean, how many Americans are watching this? I don't want to offend them, but maybe the world doesn't always revolve around them, and other countries have other concerns. Look, obviously the US is a major economy, so everyone does have to pay attention to it. And so we can't ignore it. But I think that in terms of specifically on precious metals, I'm sort of more of a longer term view. I think that whatever happens in the US, the overall trend towards spending money and having to prop up the economy, particularly now with coronavirus lingering impacts of that will have on the economy. It doesn't sort of matter in a sense whether Trump or Biden get in. The trajectory in terms of debt levels, in terms of both sides of politics having this sort of spending sort of commitment or spending other people's money attitude to how they approach the economy, it won't really make a difference to the fundamentals of gold in the long run. Obviously, we're going to see a lot of volatility, and we have seen coming up into the election, and I think that we will see a lot of volatility after it. While there be maybe some sort of sense of, I wouldn't be surprised maybe to see, because of the resolution of who's going to be in power, there probably may be a bit of an easing off in terms of risk perceptions, and then gold might sort of come off a little bit after the election, no matter who gets in, because people go, okay, well, this is all resolved as either Trump or Biden. But then when the continuing sort of problems the economy has to face still kick in, then I think people want to go, oh, okay, well, now we still basically have the same issues that we've got to deal with. The election has not resolved that. People will still then start to move back towards gold. So yeah, I think volatility in the short run, but the long-term trend's still positive.
Look, I actually like your take on that it doesn't matter which leader gets in, the long-term structural problems within the US are still going to be there, and this 8 weeks of madness isn't going to get rid of them. So let's talk about the short-term movements in gold. There's been what appears to be increasing volatility over the last few days. We're seeing big ups, big downs. What's your take on that? Is that merely just a reaction to US events, or are there other things outside of the US that are impacting those short-term movements?
Look, I think we've talked about this before. I think there's been some smart money that's come into gold well before all of this. And, I think that money is in, and it's in its position. And so they're not coming out, they're not coming in. The money flow has come in from that sort of smart money. Indeed, there's a client at ABC put in a fair substantial amount. Specifically, the trade was that, the price would move up into the election, and he was looking to get out, just before the election. Okay. So there certainly is a trade on around the volatility in the election. But I think, so we're seeing a little bit maybe people positioning in and out. I think the main money flows come in. And so now that gold's probably without that continual flow where the people that wanted to get in well before any of this volatility are set, we're sort of seeing probably a little bit of a flow out. COVID's impact has sort of dropped off a bit. So again, that sort of driver for gold has come off a little bit. And so I think the speculators, therefore, are starting to have a little bit more sway in the market. Now, we're still seeing good inflows into ETFs and so forth, but I think the speculator is maybe starting to have a little bit more weight in the market. And obviously, they're going to be highly news-driven. Whether Trump's rejecting stimulus and now he's favouring, a stimulus plan, and he's got corona, now he doesn't have corona. I mean, it's that volatility is obviously driving speculators, and then we obviously have a big US dollar influence. So the strength or lack thereof of the US dollar is really affecting gold as well. So that's the impacts on the short term. But I think positively, if you look at gold, it's still got that support just under 1900 at 1870, 1880. And that's interesting that there seemed to be definitely a buy the dip trade occurring when gold sort of gets hit a little bit. So I think it's really building a strong base, and it still shows you that there is that underlying interest in precious metals. And I'm certainly listening to a couple of podcasts that I hear from around the traps. There seems to be some people like, well, I would like to buy in, at much lower prices. So there are people, I think, who are waiting for a buying opportunity. So I think that's going to get gold supported in the short term.
Just before we move on to more of the long-term view, I just had a quick question for you. Asian demand, you made a comment back in July when we were talking that Asian demand had sort of subsided for the physical metals. Have you seen any of that increase since our last chat back in July?
Look, it's still a bit weak. I think the discounts are improving a little bit. So it's still anemic, but it's not sort of getting worse, and it is slightly improving. So I really think that's the understood factor in the market. Even in the professionals, I don't really see a lot of commentary talking about it. The potential for that when Asian demand returns, and it will, particularly once the coronavirus sort of restrictions start to ease up, hopefully. That when that kicks in, and I think we will still see Western demand, that's going to be a double hit. So I do think that's a big upside for gold, probably in the next.
I like that, the double hit. All right, so let's move on to the long-term views of gold. So we've hopefully over the next 8 weeks of divisiveness and the indecisive outcome from the US election is really just a blip for investors. What are the long-term price points, if you want to put them out there, or the long-term factors as well, driving the gold price over the next couple of years?
Look, I think it is very much, you've got to, the one thing, COVID has taken a lot of the headlines, right, for precious metals, and it seems to be the reason that's been driving it. But gold started a bull market a while ago, a couple of years ago. So there are drivers behind that, and I think it's financial market participants realising that the situation that governments, not just the US, but all governments have around their debt position and their unbalanced budgets is sort of not going to be resolved. And we've been talking about this since the financial crisis, but I think that it's starting to build up a little bit more in the professional markets where people are starting to position themselves. So we've seen a lot of smart, we've seen a lot of the billionaire quotes, where they're talking about holding gold. That's indicating that people in the markets are starting to get a little bit concerned about how stretched everything is, as well as the valuations on stocks driven by really low interest rates. We still see a lot of talk. Bank of England was just out, see a report asking banks whether they have their systems capable of handling negative interest rates. So, that is still in play. And I think the people that are connected in financial markets can see that trajectory is going to be going continually down in terms of interest rates, which is good for gold because it puts pressure on real interest rates after inflation. Even though inflation, they can't seem to get inflation kick-started no matter what sort of magic words they want to say. The Fed's are really having trouble creating those inflation expectations. So I think all of those factors are still there. And I think we're going to see that as I said, the smart money is locked in, they've got their position, they'll add to it on dips. And I think as the economic situation gets worse, not just because of COVID, but just because of the whole state of the economy problems that we've had for the last 10 years from the financial crisis, that will continue to get a bid from more retail type investors who start to sort of move in. And that's why we see a lot of that at ABC Bullion. Even though we've had that drop off from the COVID surge, we're still at elevated trading levels, significantly elevated to what we would be doing 2 or 3 years ago in terms of our baseline. So precious metals are still getting bid quite strongly from a retail investor, and I can just see that growing and grinding bigger and bigger over time.
So let's move on to a little bit more of retail investors. Now, you and I have briefly talked about the retail investor demand surging in March. And again, it was sort of a little bit prophetic back in October last year when we talked about how the machines can only produce a certain amount of gold. So You're talking about retail demand is slightly elevated this time around. Are you seeing anything to indicate that there is going to be that surge of retail investors once more over the next few months? Or do you think that retail demand and supply are sort of matching each other out at the moment?
Yeah, they're matching themselves at the moment. Let's put it this way. I think globally, I'd say, it's hard to put a number on it, but I'd say previously, say a couple of years ago, you could easily say that most manufacturers, mints, refineries had heaps of capacity. They could easily handle retail demand. But now, as I said, we had that surge in March. It's come back off, but we're a lot tighter now, I think, globally from what I hear. I mean, not all mints are back on making all products available. Some are still on sort of allocation. So it's not like, historically, a dealer could call up a mint and just go, hey, look, I need to buy 100, whatever coins, or can you send me, a few thousand of this or that? And it would be, yeah, no problem, you delivered out within a week. That you can't rely on now. So there's still products becoming available, but I think we're still at, 70% of capacity or something like that. It's not like 20%. So they're still a bit tight. So it won't take a lot more. If we get a little bit of a surge from retail investors when they start to see gold sort of appearing on mainstream, or they're starting to get that sort of word of mouth coming through, we can easily get again back into that capacity constrained and maxed out, and then everything will again go back onto back orders, and delayed deliveries and all of that sort of stuff will start to happen. So I think right now there's product availability. It's a good opportunity if you do want to get physical to get it now before we see another surge in retail. I don't have a feeling on when that retail will kick in. It's very hard to get a sense of it. It is news driven, and it's news driven, particularly mainstream media. So, and I think what we need is, again, for gold to have another run and break up to 2,000 and get through that again. And that will drive some more headlines. And then I think we'll see a bit more retail coming back in again.
All right, Bron, I just want to say thank you very much for your insight today. I'm sure some Aussie investors do appreciate the refreshing take on the US election. So thank you for joining me from Sydney, where you've got abundant freedoms to walk around and do what you want. I'm still stuck here in COVID-ridden Melbourne, but thank you once again for being here.
No problem. Thanks.